The equity markets in India and in fact across the globe have been seeing tremendous selling over the course of the last few months. Let's try and understand how you should approach this and whether you should adjust your strategy in the current context. Joining me to talk about this is Anant Ladha. And Anant, thanks so much for taking the time. Always a pleasure speaking with you. Let's start with the context. Why are equity markets under so much pressure? And from the Indian perspective, why are we seeing so much selling?
Hi, Alex. Good evening. Firstly, the reason of this complete correction or so-called crash is something which we all have already anticipated, which we were already prepared of. Biggest reason is the inflation. The CPI data of US just came at 8.6% versus the expectation of 8.3%, which was a bit of surprise. If CPI inflation is at 8.6%, obviously on-ground inflation and lifestyle inflation will be more than 11%. This is something which we can obviously interpret out of it. Whenever there is a high inflation situation going on, US Fed is bound to increase interest rates. Plus, they are bound to tighten some of the quantitative easing features and money liquidity which they have infusion earlier. So now US Fed is tightening the interest rate. Because US Fed is increasing the interest rate, almost all the countries around the globe is on the cycle of increasing their interest rate. And whenever there is rise in interest rate, all the risky asset class, be it cryptos or be it equities, they take a hit because money usually redeems from a risky asset class whenever there's a hike in interest rate and it moves toward a safer asset class, maybe for example bonds or debt or gold for that matter. Finally, the biggest reason is that rupee is depreciating. We are at one of the lowest levels. 78.3 I think was the last level, and because rupee is depreciating, FIIs are selling, and we have to agree in the end that if FIIs will sell in the Indian equity market, we will see some pain, which we are already seeing in the markets.
In fact, FI selling has been unrelenting, if you can call it that. They've been selling at a very rapid pace.
Absolutely brutal.
Yeah, absolutely brutal. But then it brings me to the next question. From the Indian perspective, Anant, the underlying story remains strong, right? The underlying story for Indian equities remains strong, or has that changed at all?
See, even if we check out the period from 2003 to 2007, which was supposedly the mother of all bull runs, we saw that market gave jitters or corrections more than 7 times, even during that period. Now, in last 2 years, market have given superb returns in 2020, 2021. It was expected that this year asset allocation will be important, and I clearly remember that around Diwali, you and me, we did a show together, and our complete focus was in 2022. Our theme and our most focus point should be asset allocation. I know now it is not the right time to redeem your equities and do asset allocation. Asset allocation is usually done when Nifty was at 18,000 plus level, when everything was green, you were seeing super portfolio, you were excited to invest in equities, you were rather overexcited to invest in equities. That was the perfect time to have asset allocation in mind. Now, because market is consolidating, it is part of the game. Underlying theme is obviously very strong. And if we look at emerging markets, I feel that amongst all the emerging market, India has a sweet spot. And I am personally very bullish on India. Probably in short term, we are volatile. We can see some more volatility because there are some more interest rate hikes which are pending. But if we talk about underlying theme and on overall perspective, India is still a sweet spot.
The Indian Central Bank, by the way, also working towards curbing inflation. 90 basis points of hikes. You could see more around the corner. So all of this is seemingly in a state of flux, right? You have the global scenario, which is uncertain, Anant. You have the Indian scenario to a certain extent that is uncertain. WPI still in double digits at a record high. Rupee, as you pointed out, at a record low. What should the Indian equity investor do at this stage? Assuming, of course, that they are long-term. We'll talk about the traders at a later point.
See, firstly, if you're a long-term investor and you have invested in mutual funds or via index funds, there is absolutely no reason to worry. now it is not the right time to do asset allocation as well. Probably you need to wait for some relief rallies, then you can do some asset allocations. I have done a very interesting data analysis for all our viewers. Suppose there was an investor who started investing in 1979. That is, we are taking from start, from 1979 till date. This investor has this habit that he'll invest in 1979 and redeem his money in 1980. Then again he'll invest in 1980 and then redeem his money in 1981. That is, he is investing for 1 year at a go. Then out of 43 observations, because there were 43 years, there are 43 observations, there were roughly around 14 observations where he would have faced losses. That is, his probability of winning is almost 2/3 and his probability of making a loss is almost 1/3, which is not a good probability when we are investing for our long-term goals. Which means that if you are investing your money, which is for 1 year, you should not use equity as an asset class. Now, the same person decided, now let me give equity or maybe Sensex some more time, and I will roll my portfolio in every 3 years. He invested in 1979, redeemed his money in 1982. Again invested in 80s and redeemed his money in 83s. In the same way, if he would have continued till date, total observation would be somewhere around 41, out of which only 7 observations are in loss, balance all are in profit. Because he was seeing some profit, he said that let me increase time horizon by a few more years, and he increased it to 5 years. Out of 39 observations, only 3 observations were in loss, and now this is some probability where we can map our long-term goals as well. Which means that if your time horizon is 5 year plus, you can probably start buying some dip, maybe start adding on your SIP, maybe you can do some SIP top-up. Strategy to do SIP top-up is very simple. Suppose if my monthly SIP is of 20,000, this month I can invest additional 20,000 rupees if I have some surplus, which I don't need for probably 5, 7, 10 years. I am still not very aggressive that I'll go and start investing lump sum, but yes, to invest via top-ups is a very good strategy. And if the same investor would have rolled his money in 10 to 15 years, there are absolutely zero observation where he's facing losses. So time is your best friend. You have to give some time. Every opportunity, every correction, every crash which came in past was an opportunity. But when we have a correction going on right in front of us, we feel that this is a trap, which is set especially for us, which is not the situation always.
But having said that, Anant, it's also true that when you look at your portfolio and you see the kind of losses that you have, especially those individuals, Anant, that invested at the low point in March of 2020 and have seen their fortunes grow exponentially over the course of 2 years, and then you see some of that being lost, it becomes a little difficult to take, right? But let's talk about an individual who has a stock portfolio. And we have spoken about construction of stock portfolios in the past. Is this the time to cut your losses in a few stocks that are underperforming? Or do you think that these stocks have perhaps been oversold, that you should not worry too much about the kind of movement that you've seen in the recent past? Like you're saying, you need to zoom out and look at 5 years and beyond. And if you're looking at 10 and 15 years, there's no possibility of a loss, or the probability is practically zero. Is that the approach to have?
See, I'll first answer your first point. Life or market, before giving you anything superb or before giving you super returns, it will always test you. It will test that whether do you deserve that return or not. Investors who invested in 2019, their test was in March 2020. Investors who invested in 2021, 2022, their test is already going on right now. So I am not sure that will everyone be able to pass this test, but all those investors who will survive during this difficult time will all obviously make their fortune during good times. If I talk about traders, I am very sure that your stop losses have already hit and you are already sitting in cash. And if you are not sitting in cash, I think you are not following rules and there's something wrong. Be it short-term trader, medium-term trader, positional traders, or positional investors, all your stop losses have been taken by the market and you're out of the market sitting on cash. Right now, on short-term basis, especially if we reach around 15,500 level, yes, there is some short-term swing opportunities with strict stop loss. If we talk about positional investing, I would at least wait for market to give me some sign of strength. For example, market going above 200-day moving average, or maybe within a period of 10 days, market showing 2 strong days by moving up more than 1.5%, and with volumes obviously higher than previous days. So I would wait for some strength from the market before making some positional takes in direct stocks. Swing trading is still okay, provided you know how to take your stop losses.
Okay, and finally, if you're talking about, so you mentioned you can top up your SIP, but you also mentioned that you're not at the point where you will say lump sum makes sense. So you're not talking about rebalancing your portfolio at this juncture. If you were to say that if somebody invested and had an 80-20 allocation, just as an example, and the 80, because of the kind of fall that you've seen over the last 3 or 4 months, has become 75 or 70. Now is the time to rebalance to 80-20 again, right?
It can be done, but you have to plan it over a period of 1 or 2 quarters.
Okay, excellent. I think that more or less answers most of the questions that my viewers will have about how to approach the investment. And also, I think what you pointed out in terms of the rolling returns makes a lot of sense. So we say this constantly on this program, our experts say it constantly on this program, and hopefully you're listening with your ears wide open, zoom out, and don't worry too much about the short term. Thank you so much, Anant, for taking the time.
Thank you so much.